So reaching a 5-year high yesterday, it does look like a little bit of a profit taking coming in, with the market down by 0.5% on $4 billion worth of stock being traded. We did see selling across all sectors, the only exceptions really being the telecom and the information technology sectors. But it does look like investors were taking risk off the table, and that was shown through comparing the market index to something like the Small Ordinaries Index, which lost more than double what the markets did. So the market was down by 0.5%, but the Small Ordinaries Index was down by 1.2%. Having said that, though, there was some phenomenal performance throughout the day, especially in the banking space. We saw a record high, an all-time record high by ANZ, Commonwealth Bank, as well as Westpac, and we also saw NAB hitting a 52-week high. Now, that was on the back of some pretty impressive numbers coming through from ANZ, and in anticipation of NAB's numbers, which are due on Thursday, with an expectation there of $5.9 billion worth of profit there. And if we have a look at some of the stocks that also reached 52-week highs, we saw stocks like Village Roadshow as well as TPG Telecom doing quite well. But on the downside, it's interesting to see those stocks making 52-week lows as well. And they were stocks like Liners, Blackmores, Oz Minerals, as well as What If. So some of these stocks were actually some of the darlings of the market not too long ago, and unfortunately not doing so well. But altogether, a pretty impressive day for the banks on the back of the ANZ result, although the market did see a pullback of 0.5%.
All-time high off the back of that result.
ANZ is one of the biggest companies on the Australian share market, and I guess if you have a look at the market, when you're seeing outperformance in terms of production reports coming through from the likes of BHP Billiton, Rio Tinto, another big area of the market, and then also on the banking space, some of the big banks exceeding expectations and actually seeing double-digit growth, you can see why the market's well supported at the moment. So $6.5 billion cash profit, that's a record. That's up 11% from the previous period, and that beats expectations of $6.4 billion. We know that one of the key drivers of the banks have been the yields, and it's nice to see the dividend also coming in ahead of expectations, 91 cents compared to market expectations of 86 cents, and that means the full year dividend, the total dividend, are up by 13% to $1.64 for the full year. We have a look at some of the metrics. There's not too much default here. We actually saw bad debts down by 18%. We also saw expenses down by 3%. We saw provisions down by 5%, and the businesses performing so strongly. Global Wealth was a standout, up by 36% in terms of profit. The New Zealand business up by 37%. The Australian business up by 11%. We saw the international and Insto business side up by 15%. So all in all, looking good, and the outlook statement also good. ANZ is saying that it does expect to see above peer earnings per share growth, and its Asia strategy is still in place, 25 to 30% of profits, aiming to come outside of Australia and New Zealand by 2017. So a great result, and I think a little bit of a surprise to the market on the upside, which is fantastic given that the banks have been updating the market every quarter, and ANZ up by 1.2%, seeing a record high today.
Strategy itself, and Michael sort of alluded to it. I mean, there had been some criticism as to whether or not it is paying off. It's certainly been a long time coming. Do you see it as potentially becoming, because of that growth option, one of the, if not the premier bank in our market over some distance?
I think it does offer that growth option, but it also involves a little bit more risk in terms of that Asian strategy. And if we have a look at ANZ, really the strongest growth for ANZ came through from New Zealand, as well as from its global wealth business. And I think the global wealth business is an area of strength, but our view on the banks at the moment is that domestically what we are seeing is such a strong housing market that it is going to be the domestically focused banks which will be the best performers. So that's the likes of CBA as well as Westpac. ANZ has a little bit of an edge in that it has been an underperformer over the years. So when it comes out with its result on Thursday, we are expecting to see $5.9 billion. But of course, the third quarter results, what we saw particularly in the UK business is that we saw falling bad debts and we saw increasing volumes. And if it can keep that up, I think the market's going to have to reevaluate that UK business to be more of a positive impact on NAB's share price. So NAB in terms of valuation terms and the turnaround in that UK business could be a positive, and we could see outperformance there. But I think right now the strongest part in terms of the banks is the domestic business, and that's really because the housing market is going so strong. So I think in the current period it is going to be those domestically focused banks like Westpac as well as Commonwealth Bank that outperform.